We are now heading for the home stretch. Quarters 8 and quarter 7 are really all about implementation of your strategy and making sure you optimize your strategic and market position. We all are clear about the mental discipline of marketplace, and you have it all pat down in regard to analyzing the market trends and competitive action through the feedback that you receive from outputs and adjusting your tactics and strategy accordingly. At this point, there is really no change in business strategy anymore. What you do is you are changing tactics to make sure you optimize your results. It's as before, the management of strategy. You need to figure out what are the causes of performance shortfalls, and you have adapt to the new trends, opportunities, problems, and competitive actions. You do have to still manage the future and make sure to take initiative to expand resources where you need to improve your position in the marketplace. At this point, it's probably too late to figure out new alliances, as you will not reap the benefits before quarter 8. As before, you have to use SWOT as a tool of management, figuring out what your competitors are doing, how the market has received your new product designs. Make sure that your employee productivity is increased. Make sure that you optimize your manufacturing by analyzing your reports, and make sure that your financial statements, your accounting reports are analyzed so you're not going to leave any stone unturned to improve your overall performance. For that, it's also important that you look at the industry financial benchmarks to see where you are compared to your competitors and see whether you need to work additional tasks to improve your profitability. You, of course, keep on benchmarking your competitors with their brand and ad designs, their pricing and sales priority, their channel and sales strategy, their ad placements, as well as looking at your demand by segment and brand. It is still time to reverse engineer the strategy of other competitors and determine where the threat is, and also determine where your strength is so you can improve on that strength and probably improve your cash flows working on your strength. As always, try to emulate good decisions, and for the last 2 quarters, predict the direction of competitive moves. While you're probably not going to adjust your strategy much, your tactics will probably change quite a bit still. Your resource productivity must be improved even in quarters 7 and 8. So look at your responsibilities and look at the elasticity of the market response for each function for which you now have ample evidence. Then, of course, look at the different points that you can improve. Should we spend more advertising money? Should we spend more support on sales? Should we lower our prices? And what is the benefit ratio of lowering prices compared to improved unit sales? I don't think that you want to spend more R&D unless you're in a position where you have superior market dominance and you can spend on R&D so that for the balanced scorecard measure of managing the future, you improve your scorecard. If you are not in a position that you spend money on R&D but really have to spend money to improve your current market positioning, I would probably look at R&D very skeptical. More sales outlets means more sales. More capacity means that you can improve your fulfillment rate. And whether you want better compensation or not depends on whether the productivity you gain is really a positive benefit at the bottom line. As we said, look at your resource productivity for the margins. So in other words, look at whether your salespeople in Paris or New York have a better margin in regard to the activity. These margins you need to look at for more salespeople, for your traveler workforce or other segments, whether you want to expand your sales offices, brick and mortar, or your web-based marketing, and whether you want to add in certain, advertise in certain journals. Um, it's still time in Q7 to introduce another brand to another target segment. And even in Q8, you can do that to cash in on your research and development. I am not sure that it makes more sense to increase salary, health benefits, or vacation time, because you probably at this point have it pretty much pared down on what is happening in regard to productivity. If you see that you're a market laggard, you might want to adjust that. If you have price competition and the price competition is ruinous, you have to really make a hard decision whether you want to follow that to stay with the units that you have and fill out the manufacturing capacity, or whether you want to stay up, lose some units, but keep the margins. So that's very much a strategic analysis that you have to go through for Q7 and 8. Capital structure, we talked about that in Q6. You need to figure out whether you want to have additional debt. Can you do additional debt? Does it make sense? Is your additional debt helping you with the return on investment or not? And what can you do with more money? And when it comes to the balanced scorecard, this is now the time we are looking at the balanced scorecard levers and see what you can do to improve your overall score. Remember the 9 parts of the balanced scorecard, and every part has very detailed formulas with levers. Go into the simulation, look at your balanced scorecard, look at the levers, look at the formulas, and see whether there are any glaring weaknesses that you need to address. As before, work on the margin to improve your overall performance.